Hello everyone and welcome back. So today we're going to be doing a great topic specifically relating to pennants, flags, funnels, triangles. There's so many different nicknames to it, and it's specifically relating to a big trade opportunity that I'm looking at. So in this previous video, we took a look at the Sunday traders talk at multiple different markets, and we identified a trade opportunity on the gold market. So I mentioned in the video, I'm going to be focusing on that specific trade. But what I want to do in this trade is to be able to share a great technique with you in how to trade breakouts. So just to introduce myself, my name is Morgan, and I'm the founding director and the head of trading at MS Equities Trading. I've been trading for over a decade, but I've also had the opportunity of training students in over 30 countries for close to a decade. So in this video, my goal is to impart this knowledge to you that you may be able to go forward in your trading week with more knowledge and more opportunity that can hopefully lead to trading success. So what we're going to do is get started on the trading charts, jump straight into it, and then I'll be able to show you exactly what this trade opportunity on gold might be yielding. And by the looks of it, I'm very, very confident there's going to be a great trade coming out of this. So just to kick things off, I like to keep it simple and straightforward. We're using a clean chart. I make use of MetaTrader 5, but I also make use of the old stock standard pen and paper. This is the beginning of every trade idea that I have. Well, the trade ideas that normally work. The ones that don't work are often the ones I didn't write down. But get started with a pen and paper. It's really good that you can diarize your trade ideas, any kind of scribbles or any information that you are able to absorb from the financial markets, put it on paper, and then you can put it into your more complicated tools and methods that you make use of to analyze the financial markets. So just to start off with, the bearish or the bullish pennant, flag, breakout, triangle, there's many different names for it, is effectively a very simple explanation that it's two trend lines that intersect at a certain point, meaning like this. So you can see that the higher trend line and the lower trend line at some point are going to converge. So they don't run parallel, they are running closer and closer to each other to a point where the price is going to break out in a certain direction. Now, this specific strategy or pattern has many different names across the industry, and there's many traders that try to name it something fancy to make it sound like they invented it. This has been a stock standard method used for an extremely long time. And this is specifically what we're going to be focusing on for this video. So there are many different explanations for it. You can go and take a look at it online, but it's entirely up to you as to where you find your information. Let me just give you a very basic explanation. So some key takeaways. It's a chart pattern that's characterized by two converging trend lines connecting a series of sequential peaks and troughs. Pennants are a continuation pattern where a period of consolidation is followed by a breakout. The two differ by duration and appearance of a flagpole. So if you would think of a flagpole, you don't have a square flag, you've got a triangular flag. So it's effectively a symmetrical triangle. So jumping onto the charts here, you can see what we stopped off with on our previous video is exactly what you can, what you would have taken from what I just said to you now. So this is specifically a pattern that I've traded for an extremely long time. When I actually started out back at 16 years old learning how to trade, the academy that I went to specifically focused on breakouts, and it was a trader that traded penny stocks, and he traded mostly only breakouts. And it was quite funny because there was almost no basics, no fundamentals to the course. It was basically like, this is what the markets is, and here are four trading patterns, and each and every one of them were breakouts, and he had special names for each one of the breakouts. So anyway, on this chart, we're going to be focusing on taking a look at what we believe might be happening. So you can see here that there were a few different levels that I had identified. So let me just take a look at my previous notes. So in these notes, I had said overall bullish weekly is regrouping, showing bullish pennant. Continuation zone could be 3440 to 3500. A range could sit between 3440 to 3280. And a retracement zone could possibly be 3280 to 3160. So if you want to find out more about what I said in that video, please go watch it. But just jumping into this, you can see here I basically set up the previous support and resistance levels using horizontal lines. And what I'm specifically taking a look at here, let me just key out some specific points, is you can see over here, the market has tested this level over here, and it has tested, these highs over here as well. You can see the market was a little bit lackluster here. It didn't really get all the way up to that point. But you can see how these trend lines are converging into a point where you can basically see we're running out of space over here. So there is very little space left, and effectively the market is going to break out either in this direction or it's going to break out in this direction. Now, the reason why I gave you those three numbers is the continuation, the interrange trading, and the retracement is really the only way, the only place that this market is going to go. It's either going to pull back to these levels, it's either going to push higher, or it's going to continue moving on. So if you take a look at the weekly chart, of course, the gold markets have been extremely bullish. So if we just quickly take a jump back into the weekly, you can see how this market has had an extremely strong bull run. Now, fundamentally, this conversation could take a lot longer, so I'm not going to be jumping into the fundamentals. I'm going to be focusing specifically on technicals and breakouts. But you can see here that the market previously had quite a long period where it was trading within a range, and then eventually broke out and has then come to this consolidation point. Something that I need to show you, however, is you can see prior to this, there were two areas where the market consolidated prior to breaking out. I think those are going to be important aspects for us to take a look into before we get to this point. The market has had a few different areas where you can see price has consolidated and then has broken out to the upside. So this is a common experience that you'll see, especially in commodities that are gaining value. I've traded gold for over a decade, and I've used this breakout strategy multiple times, but you can see how price is getting to a point where it has a very strong push. It comes to consolidate and then eventually continues to push higher. So you can see historically there are quite a few levels where the market has shown these triangle formations and has broken out beyond it and continued to move higher. Now you can see there are slightly smaller movements. For example, over here, you can see that the market has consolidated and then continued moving higher. So that consolidation is where the market has run out of energy. The sellers begin to step and the market pulls back slightly, but then basically the market sees that the gold price or the asset price is not ready to pull back all the way, and then the buyers step in and continue moving higher. Now, in terms of this position, our challenge is to figure out, is the market going to move higher or is it going to move lower? Now, it's difficult to say. Even for myself, someone who's traded for such a long time, it really is difficult to say. So what can we do by figuring out the next question? The next question will be taking a look at the interrange trading. So you can see on the left there, I've named the lower range, range 2, and the higher range, range 1. So I'm basically splitting this market in two. So it's important for us to see that within this breakout, there are going to be two levels. And those levels allow you to understand where is the market sitting right now. Is it sitting closer to the bearish side or the bullish side? Now, you can see that the market on the 4-hourly chart has had quite a consistent downtrend. and it seems as though the market could continue moving down towards this level. Now, as you can see historically, the market has behaved in a very similar way. Let's say, for example, let's just dive into here and then here as well. You can see how these trends are behaving in a very similar way, where the market has these extremely strong sell-offs, these very long wicks to the downsides, and then the market continues to push back higher. So that could be a definite indicator that the market could move a lot faster than we expect. So what I'm going to do here is just put down some info so that we're all on the same page, no pun intended. And then at least it gives us a better understanding of what we saw while we were analyzing this position. So what I've made sure to write down is that there is a very strong bullish pennant on the daily. It's closer to the support level or the range 2. And then the third one is that there's very strong sell-off spikes, and that's something that I've kept as a warning, just to remind myself that I must make sure if I want to get in on this position, that I get in on this position quickly. So if I were to take a further look into this, I'm going to honestly be playing somewhat of a guessing game, because beyond what I can currently see, the next step would be to look into an entry point. Now, for myself and my students, we use a much more advanced spreadsheet that allows us to analyze the fundamentals, the technicals, quantitative and qualitative analytics. But what I'm going to do currently is give you a basic breakdown of what my risk management would look like on a visual aspect for this chart. However, I am not providing you persuasive or investment advice to take this trade. This is purely for educational purposes. In terms of splitting the range up, that will at least allow me to know that if the market is moving down to this level here, you can see how this market has consistently moved across these points. And you can see that's also going to be an intersection point for the support level. So I'm just going to draw these a little bit tighter to the candles, because I want to know exactly where that market could be moving to. But my entry zone for this position would be somewhere along this line. And then you can see over here, so this market has tested this trend line more than once. It's actually been multiple times, with this being quite a big sell-off. But as you can see, this strong sell-off over here came just after a very strong bull run. So that is something that you can see quite often, is when the market has quite a big push, there'll be a much larger consolidation. But these 4 levels over here help me identify that I've chosen the right trend line. So what I'm going to do is just quickly remove this previous trend line over here, because this is not going to be useful to us if it's not lining up with what we can see on the charts. And that gives me a much cleaner perspective on where I believe the market could be going. Now, another aspect is that I would like to just create somewhat of a zone using this trend line. So what I'm going to do is just click and drag it, that I can create a slightly higher zone over here. You can see that the market has also been testing this level here slightly. So apart from those 4 points that we were able to see the market testing, you can also see over here the market has tested this level as well. So that is also an important aspect to see, as the trend line is not specifically focused just on one level. It could be focused on more than one level. But what that allows us to do is have a zone of entry. So that entry zone would allow us to be more flexible with our entries, and allow us to know that if the market touches one of those 2 levels, it could be an indicator for us to make an entry point. So if I were to take a look at this zone over here would be mostly where I'd want the market to show me an entry. So I wouldn't want to enter higher above this zone, and I wouldn't want to enter below this zone. If the market moves below these two trend lines, there is a possibility that the market could begin breaking down, or it could create a fake out and move back up into the range. If the market is in a position where it is going to hit that zone and trade within it going horizontally, then I'm also going to reconsider my position, because I might not want to be holding a position that all of a sudden changes its attitude. As you can see, there's been very, very strong pushes to the downside more than once in this pennant. So that's really what I'm trying to see here. Is I'd like to see the market come back down, touch this level, and move higher again. Now, one of the problems is, what if the market does this? What if the market hits this level, pulls up, and then pulls straight back down? Now, are we going to hold the trade, or are we going to cut the trade? Now, that is entirely up to you. For myself, what I'd probably do is, at this entry level, is I'd place 2 trades or perhaps 3. And then when the market gets up to this previous level, this previous resistance level, I'd probably cut 1 or 2 of the trades and leave 1 to keep running to see if the market does break out beyond this resistance level and continue moving. But again, that is entirely up to you to decide. So what I would really want to focus on with this is keeping the entry point between the 2 zones. So I'm just going to say here, entry. So in terms of the entry, I'm going to focus on entering between these 2 trend lines. So that would be somewhere in this zone over here. And then what my focus is going to be is to hold to range 1, between range 1 and the previous high of this level over here. So that is going to be my second zone. And then my third zone is basically going to be to hold beyond the breakout. So what that basically means is I'll take 3 positions on this trade, going long at this support zone down here at the bottom. So let me just put a marker here. So I'm going to be going long inside this zone where this red box is, holding 2 of the positions up to this zone, and then the very last position I'll hold all the way up beyond the breakout if it does break out. What I will do, however, is keep my stop zone open right up until the point that the market has moved towards target 1. So for the target numbers, so my entry point, I'm going to sit at around about 3,300. So you can see 3,300 is around about there. My first target, I'm going to set at 3,388, which is around about over here, which is between the central horizontal level where range 1 begins and the previous high of the last pullback. And then my second target is going to be beyond the historic resistance level. So that would be a position I hold until I believe the market is regathering momentum or turning around. And then I would cut that position as well. Then in terms of my stop loss, I'm going to put my stop loss at 3,250. So 3,250 is around about over here. And that is specifically because I want to try and avoid being in the zone of the previous low. So I don't really want to be here. I don't want to set a stop loss at the previous low, because if the market spikes to that level, I'm immediately stopped out. I want to be below this level and below this level over here, because those are the 2 previous historic levels. A lot of people are going to set their stop loss at this previous low, and the market, if it pushes to that level, everyone is going to be stopped out, and then all of a sudden you're going to see a whole bunch of buying pressure from that level pushing higher. So I really want to set my stop loss zone at this level over here. Let me just quickly take that out. I really want to focus on having a stop zone somewhere in this level here. That is going to really be my focus, to be more protective of my stop And then once my target 1 is hit, I will then move my stop loss to the entry point so that if I get stopped out on my third trade, my third position will make no loss. So I'll just break even on that position. So as you can see, that's very straightforward, very standard approach. There is a lot that I'm leaving out here that I focus on keeping for my students, but for yourself, there is not too much more that you need to add to it when you're focusing on learning more about the financial markets. Like I said, keep it simple, keep it straightforward, write everything down on paper, and make sure that you are focused on sticking to your system and not just making money. For myself, for example, I'm going to set an order that basically sets my entry point at 3,300. My first target is going to be at 33.88 and my stop loss is going to sit at 32.50. And then I leave the position and I will check that position once target 1 is hit at 33.88, and then I will shift my stop losses and I will forget about it. Because at the end of the day, okay, I'm not going to forget about it, but forget about it. No, don't forget about your trades. That is not a good idea. But don't be overzealous about watching your trades and watching the performance of your trades, because it's like watching paint dry. It's not going to affect how much faster it happens. So once your system has been set in stone or set on paper, then stick to it and focus on the success of the system you implement and not about the amount of money that you make. That's why I want to avoid ever speaking to you about how much money I make trading, because there's absolutely no reason why how much money I make should persuade you to watch this video or not. It should really be focused on me showing you a system that works that you can implement for yourself as well. So thank you once again for watching this video and for tuning in. I sincerely appreciate your support. If you have any questions, please put them down in the comments below and I'll make sure to answer them in the next videos. Lastly, I just want to say for all of you, please make sure if you're out there purchasing any kind of Forex service, trading service, investment service, make sure it is reputable. Make sure they have some kind of financial services licensing if they are taking investment from you, and please make sure that they have some type of a website or some type of a platform that you can review online through Google searches or any type of other review sites. And most importantly, if you have lost money to a trading scam, please don't contact me to get it back for you, because if you can't get your money back, I sure as hell can't get it back for you. Once again, everyone, thank you so much for tuning into this video, and I'll see you in the next one. Cheers for now.